Hi, hello, welcome to all. In this video, we are going to discuss about budgetary control chapter in SCMPE chapter. Okay, what is there in budgetary control? We have limitations of traditional budgets. For traditional budget, there are some limitations. Now we will calculating budgetary controls. For here we have control schemes. Two types of control scheme. Feedback control and forward control, and behavior aspect of budgetary control will be effect of budget difficulty and performance, participation in budget setting up process, and use of accounting information in performance evaluation. This is behavioral aspects. And next, behind budgeting. What is there in behind budgeting? Characteristics, suitability, benefits, principle of for adaptive performance management, implementation of beyond budget traditional or versus beyond budget. Now, what is meant by budgetary control? Here, budgetary control means systematic control of organization operation through establishment of standards and targets. So, what they will put the standard and they put the targets for income and expenditure, and continuously they will monitor and adjustment the performance against them. This is budgetary control. Okay, for this they will re-evaluate the periodic basis. For budgetary control, we require some prerequisitions. What are the prerequisitions? That are serious attitude to the system is required. First of all, you must be a serious for the work. Next, clear demarcation between area of managerial responsibilities. Who is responsible for this process? They will clearly identify. Next, there must be a reasonable budget target. You cannot put the unrealistic budget or difficulty budget. For example, you have reached today 100 and now next you are putting for 1000 kilometers. For if you are running for running and you are for in police training, you are run for 100 meters today and you can kept to for tomorrow 120 or 150, or you are putting for 2000 or 3000. It is not a reasonable budget. Next, establish data collection and analysis and report technique. These are all prerequisites for effective budget. If you want your budget will be effective, then these prerequisites will be consider. Next, reports aimed at individual managers rather than generals. The reports will be sent to not for normal manager person. It will be sent to individual managers. Next, fair short reports periodically and periodic periods, typically month. So fairly short reporting will be sent. Next, timely variance. What we will see the variance of it is a short variance or it is a long variance of. We will see based on that variance. If it is a small variance, we will inform to the line management. If it is a large variance, we will inform to the higher level management. That type of activities. Next, action being taken to get operations back under control if they are shown to be out of control. Next, we will see that budgetary control, feedback control and forward control. There are two control schemes. These two are main important. What is there in forward control and what is there in feedback control and what is there in forward control? These are first feedback control. We will see this. Feedback control means here. Feedback control means it is the name suggests reaction after an action has taken place. So you will react after the action was taken. That is once action was completed, then you are realizing, so I am not done this. That is the case. That is reaction after the action has taken place. So there has to be error if we want to take corrective actions. Next, it identify an error that has already taken place by comparing to the actual historical results. So we will see our historical results with the budgeted results. Therefore, its work will be detective tool. It is like a detective tool. What the detectives will do after the murder was happened and detective came and he will analyze. So this person is died this type. So this may happen this type. That is the detective tool. So this feedback control also same like a detective tool. Next, according to CIM official terminology, it is defined that measurement of difference between planned output and actual output. So it is a different measure. planned output and actual output achieved, and modification of subject actions and our plans to achieve future required results. Here feedback control is an integral part of budgetary control and standard control systems. Next, budgetary control. What will happen here? First of all, you will identify one deviation, and for that deviation you will analyze the causes for deviation, and we can go for progressive corrective actions and implement that program. And after the program implementation for correction, we will decide the performance, and after that we decide one performance. What is the actual performance we will see. For that actual performance, measurement will be taken. For measurement we will take the comparison against the standard. If it is okay, if it is not okay, we will identify the deviations again. This is related to feedback control. And after that, control report. Control report means report for our feedback devices, but only part of feedback system. A control report does not by itself causes a change in performance. It will not change any performances. It is a only related data and which the controls is existed. The change results only when managers taken action that lead to change. Here. Next, feedback management control. What will be there in feedback management controls? Feedback report should disclose both accomplishment and responsibilities, and should be extracted promptly, and should disclose strength and relationship, and feedback report should disclose variations from standard, and feedback report should be standard format. So it is a feedback management report. What is there in report? It have responsibilities and reports extracted promptly, and disclose the strength and relationship, and disclose variations, and it is a one standard format. And what is the limitations of feedback control? Feedback control has it is trusting on it does feedback control system does have some operational limitations. What are that operational limitations? First one was success of error detection system. Heavily it is dependent heavily on success of error detection system. Next, secondly, it is a time lag. Why time lag? It is seeing after the taken place, after the activity was taken place. So it has two limitations. So first of all, it is heavily success of error detection system, and it is dependent. Because of it dependent, it is a dependent. First one is dependent, and second one is time lag. This is limitations, feedback control limitations. Next, for forward control. What is the feed forward control? It is to measure the amount of error before it actually taken place. This is forward control. So we may thus be able to place control. We will place the control mechanism before the error taken place. So there is not happen any errors. We will put the measures. We will take the control measures before it happens. That is feed forward. It is like a you are going to take measures before it taken place. Next, feed forward control is one such controlling system. Next, according to CMA Operational Technology, it is defined as forecasting of differences between actual and planned outcomes. So actual and planned outcomes. In feedback control, what is here till measure of differences between planned output and actual outputs. Here forecasting, it is forecasting difference between actual and planned outcomes. Next, feed forward control operates by comparing budgeted results against forecast. Here we have forecast, that is provisions, protections, etc. Provisions, estimations, or projections, they will see that. Based on that we will calculate it. Next, control action is triggered by difference between budgeted and forecast results. Next, example. Here example will be information in industrial sector. Industrial disputes in a state which you have major supply of an important material could cause smart buyers to buy before price went up and their own inventory were exhausted. So what they can do for industry industry persons, they will purchase the material which is required, main required. When will they purchase? Before the price will go up, and before their existing inventory exhaust. This is purely a feed forward control. Here in content pure feedback system would not react until inventory had actually fallen. Next, Smart Move Incorporation made a smart move in anticipating its sales demand of 1,000 units of ready-made cloth its items for the next year. So is for purchasing for next year based on its current year sales. Based on its current year sales, he has purchasing for next year and market research that to account for change customer preferences. However, two-third of month of the year, COVID news come like bolt for the blue and things changes drastically. Yearly, the management team therefore changed its anticipation and forecasted that it could only sell 400 units. So previously it was sell 1000 units. Now it is selling only 400 units due to falling purchase power of customers. Due to COVID, customers are not purchasing. Now, thus with use of feed forward control, the firm could proactively identify the issues before it happened and could them that estimated the demand would not met up. Note, any manager who ignores feed forward control will contribute downfall of the company. If you are not in a feed forward, your company contribution going to downfall. Next, implementation of feed forward controls. We have 6 broad approaches. First, what we will see, indicators, both leading and earning warnings. Next, what is your contingency plan and what is the trend is going in the market and what is adaptive mechanisms and congruent system design and policy directives. This is the 6 measures, 6 approaches for implementing proactive management. Next, feed forward control guidelines for feed forward. For implementation feed forward control, we required, first we must require planning and analysis of required. What is you required, you must know before that, so that you will plan accordingly. Next, careful discrimination must be applied in selecting input variables. Next, feed forward system must be kept dynamic. It must be kept dynamic, not a static. Dynamic means change accordingly. Next, the model of control system should be developed. It must be developed, not a developing. It must be a developed. Next, data and input variables must regularly collected. Next, data and input variables must be assessed. Here they must be controlled and here they must be assessed. Next, feed forward controls requires actions. If you require actions against, what are the limitations? Limitations are, we have 2 limitations, that is evaluation. Here feed forward control process is the evaluation process. It is a evaluation process. It is concerned with estimation, so it is dependent on estimations of uncertain features. We don't know the feature. Based on that feature, we are estimating. This problem uncertainty is likely to limit applications of the concept, and the study of future is not well developed. Neither are the tools that have potential for overcoming the problem of uncertainty. So it here limitations was, one is uncertain estimating. It is dependent on estimation of uncertain features, and where the uncertainty problem is there and where their future is not well developed, in where future is not well developed. In case of feedback control, it has dependent on historical results with the budgeted controls. Next, what is there provided? Here we will see one case scenario. What is there in case scenario? Real Petroleum Corporation manufactures lubricant oil. So it is providing manufacturing lubricant oil. Okay, what is there happen? For motor vehicles, 2-wheelers, 4-wheelers, heavy vehicles, the company offers lubricant oils in various packages ranging from 100 milliliters, 100 ml and 200 liters drum. So it is have 100 ml one and 200 liters drum. It is drum and it is pouch. Next, about 70% of lubricant sales compromises are made the from 900 ml cans. From this 900 cans. Next, the process of manufacturing and packing lubricants are given below. Okay, base oil of required grade is imported from Middle East. So we are purchasing our raw material from Middle East. The base oil is blended with additive at the manufacturing plant at specified temperature. It is required specified temperature to produce the lubricant oil. Next, the oil is stored for day to bring the temperature normal. The plant has automated bottling facility. So it has automated bottling facility. The operator is required to precast. So you want to precast the quantity and number of cans to be filled in computerized system. No manual intervention is required thereafter. So the product is filled in cans. So what will happen? The cans will fill in automatic way at the first stage itself. First stage of packing with 900 ml product. So 900 product, we are producing 900 ml cans. For 900 ml cans, in the first stage it will be packing automatically, and caps are fixed on the cans and seals at the second stage. It is the first stage. It is second, and next second stage will be caps putting and start stage. The product is weighted at start stage. So at the start stage, what we are doing at the start stage, packing conversion factors volume into weight before can are packed into cartons. So here we are checking the weight. Here we are checking the weight. Okay, any can having lesser quantity. For this if you have, for third one they are providing additionally for weight checking. Once if you are checking the weight, if the oil lesser quantity, if it is lesser quantity, then what will they do? Quantity of oil is removed before the can are packed into cartons. The cans will be short filled, cannot be reused. It cannot be reused. Once the seal is broken, the can is no use. So if you seal broken the seal, it will be no use. So there is no process by which the oil is short filled can could be reused, hence product is wasted. If the third process is not done properly, that is weight checking, then it will be wasted product. It will be wasted product. So that the company is considering proposed to add components. So up to this, what is they doing? For up to the third stage, after the third stage they are going for checking. So it is a feedback where they are checking after the action was taken, after the filling was taken, before the capping, so after the volume. So it is a feed forward up to this, so that they are moving to they are proposing to new concept for this feedback. Up to third stage is feedback, and now they are going for forward. What they are proposing? To add a component in its packing unit to avoid losses arising out of quantity issues in packing. The component will install after the first stage of so for this stage they have three stages now. For each stage only they are going to implement one mission. They are going to install one mission. The component will measure the value of product and will forward. So it is feed forward. It is a feed forward control. So at the first stage itself they are going to find when the proposal is implemented. Now the existing is feedback. Okay, next, in case of cans does not have required volumes, the can will be topped up with the balanced product before capping and sealing process. The company will be able to achieve 0% wastage. So when you use the feed forward control, then it will be zero wastage due to short filling after implementation. Now what is you require? Using the context of control system, identify and explain the types of control which is existing in the company and type of control which is proposed. So existing was feedback and proposed was feed forward. This is back. Okay, now what we want to provide? Context of control system we need to provide, and feed forward we need to provide, feedback we will provide. Now control is a management function of establishing benchmarks. What the control is do? Control means what? Management functions of establishing a benchmark and comparing the actual performance against the benchmark. It will establish benchmark and compare with this benchmark, and for if you are not produce this much, they will take the corrective actions. So control is required at all level of organizations to ensure that the organization achieves its intended objectives. So that there are two types of control system. What is the two types of feedback control and feed forward control? Okay, for feedback control means what? Feedback control means which is a control activity. It is a control activity that takes place after process is completed. In our case, the third stage, which is wait seeing stage. It is also known as post action control. It is a action places after process is complete, and it is also known as post action control. And if any problem is identified after a process is complete, it is corrective action. Corrective actions. Next, to taken, why this corrective action is taken? To rectify the problem. Feedback control provides information only after the process is complete, and sometimes a significant time is lost. Already we have lost the significant time to take the corrective actions. In our case, if you are not wait the act properly, if the seal was open, it was become waste. That is, time lag was actually happen. Next, feedback based system have the advantages of being simple and easy to implement. Next, now real petroleum. We will link the meaning to the our given case scenario. That is, real petroleum currently has feedback control. It is existing. Currently they have in feedback control in place. The actual value of the product is measured at end of packing process. So why we are telling it is a feedback control? Because they are measuring at the end of packing process. The current control process is that any can which is short fill is not packed in the cartons. This ensures that lower quantity of product is not supplied in the market. The current control system, however, leads to product losses, as identification of short fill cans at the end of process is not useful. If you identified also, it will be not useful to the production process. In case there is a huge variation in final packing, the packing system can be reviewed to ensure that such problems do not occur in the future. Next, feed forward control. What is feed forward control? Feed forward control is also referred to preventive control. The rationale behind feed forward control is to foresee potential problems and take corrective actions. It is foresee potential problems and take corrective actions to ensure that the final output is expected. Feed forward controls are desirable. Feed forward controls are desirable because they allow management to prevent problems rather than having to cure them later. So after the problem is came, we will not take the action. We will take the solution, prevent the problems. Feed forward control are costly to implement as it requires additional investment. What we require additional information? So for the purpose of this happening, we are installing one mission. In the question, we have one mission at the first stage. That is, we have additional investment is required. Next, designed to detect deviations from standards or goals to allow corrections to be made before particular sequence is action is completed. So in our sequence, we are existing in third stage and we are going to first stage. So the proposed system in real petroleum is feed forward control. In this case, any short filling is identified in packing process itself. Corrective actions is taken to ensure that final product can have proper quantity of product. The new process is beneficiary to the company as the waste arising out of packing process can be avoided. It will be avoid the wastages. The saving must be compared with the cost required to modify the packing process before finalizing on whether the new system should be implemented or not. We will see For example, in our question they are provided at 900 cases a third stage. If you lost, for example, if you lost 1 lakh rupee, but for the new machine implementation, for the installment of new machine, it will be 50,000. Then we will save the 50,000. Then we will finalize that it will be implemented. If the installing machine will be 1,50,000, then it is lost to the company, so we will not implement. That is the case study. Next, behavior aspects of budgetary control. What are there in behavior aspects in budgetary controls? And in budgetary controls we have effect of budgetary difficulty in performance. We will see one one. Here we will see budget insight slack. That is, budget affect the approach and behavior of managers and used to motivate the managers. What the budget will do, it will a approach and it is a behavior of manage, it is used to motivate the managers. Next, unrealistic demand targets tend to affect managers performance adversely, allowing a manager to set their own targets. Here they will get the own targets, will introduce slack targets. Next, managers working in an environment where they are expected to meet the budget targets often try to introduce slack into budgets, but where there is a more relaxed attitude or when the other factors are considered alongside analysis of variance, managers are generally less inclined into introduce slack. For example, if you have a case and your friends are targeting you and they are giving you budget, they may give budget in easy way or they will give in medium way or they will give in difficult way. Your performance is dependent on, if your performance is good you will reach up to the easy and medium level, and if your performance is too good then only you will reach the difficult stage. That is the case. Effect of budget of difficulty performance will be, we will see that budget have no motivation effect unless they accepted the managers involved have their own personal target. So if you are treated, your involvement is there, then only your friend's target you can achieve, otherwise you cannot achieve your friends whatever the target where they are keeping. And budgeter is no longer accepted, where the more demanding the target, better the result is achieved. For example, they are giving the target to you in a more difficulty target, then it is not acceptable. Next, demanding budget are seen more relevant than less difficulty target, but negative attitude results if they are seen to difficult. Next, acceptance of budget is facilitated when good upward communication exists. You must have good communication with your friends, then only it is acceptable. Next, managers' reactions to budget targets are found affected both the way personality and more general culture and organization's norms. So, effect of budget difficulty and performance will be seen here in a chart. This is your performance, and your friends is providing the target. If it is a target is easy, your performance and expectation budget you will reach accordingly, there is no issue. And if it is a budget is difficult, they provided budget is difficult, and then your requirement performance will be high, then your requirement performance will be required more high, you will work more, then you will reach your budget, difficult budget. And if they provide the difficult, then the budget was high, if you work properly you will reach it. If you are not work properly, your actual performance will go down. Whenever if you are not they provided highly unreasonable budget, then it is hard to reach, so you will demotivate and your performance will be decreased. In decrease, it will decrease, then become difficulty or easy level also, that is the demotivation. Next, here they provided the balance scorecard approach, Kalpan and Norton, the building block approach, figure that Northern can be great help in ensuring the objectives or targets or budgets are set for a very wide range of factors, both financial and non-financial. Next, in frustration, in frustrating working with Daniel. So they provided one case scenario. What is there in case scenario? He is a one Daniel person, one person he is there. Okay, we will take Daniel. He is a very dominant and expect everything. He is expecting everything to be done his way. We have done more and better work to get that budgeted. The minute we make it, the tightening the budget on his. See, he is one person. He is one boss. He is giving always work, and structuring, and he is a one frustrated person. And after that, sorry. After that, we will take this. Okay, we won't work any faster and still maintain quality, and we are the person, we will focus on quality, and we always seem to be interrupting the big jobs for all those small rushes orders. So what we have for frustration, we are doing one work and the Daniel is giving another work, so that for rush orders, so urgent requirement, this is urgent requirement, so that type of work they are providing. So it is uncontrollable factor is there for rushes, and we do not have coordination between that Daniel. We are working for quality, and he is required for cost. Next, we always seem for interpreting. Okay, the accountant seems to know everything that happening in my department, sometimes even before I do, and I thought all that budget and accounting staff was supposed to help, but it is just to me into trouble. I am trying to put out of quality, so he is depending on quality, put quality of work, and they are trying to save money. So there is a conflict between both goals persons. So one person is saving money, one person is quality. Next, this is dead end job, I don't see much of the future here. So the said Mr. Singh is a manager, and this person is a Daniel is a boss to this person of the machine shop of Global Manufacturing, a UK based company. Mr. Singh has just attended the monthly performance evaluation meeting for plant department head, and the meeting was being held on third Friday. So it was on a third Friday it was happened. Okay, what happened in third Friday? The meeting was happened. Okay, for the meeting was happened, the man in where it was happened, university, Mansoor University. Just a second. Friday was happened though, has joined the Indian operation a year earlier. Next, Mr. Singh has just been given the worst evaluation he had ever received in his long career. So he is troubling him. Mr. Singh has just given a worst evaluation he had received in his long career with global manufacturing. Next, he was the most respected of the experienced mechanist in the company. Old plant manager had often stated that the company's success was due to high quality of work machinist. Like often stated that the company's success was due to that. Mr. Singh, he had been with Global Manufacturing Limited for many years and was promoted to supervisor. Next, promoted to supervisor. Often the machine shop when the company expanded and moved it to its present location. As a supervisor, Mr. Singh stressed the important craft shift, and told his worker that he wanted no careless work coming from his department. Now here when Mr. Daniel became the plant manager, he directed that monthly performance comparison he had made between actual and budgeted cost. So he is moving around budgeted and actual cost he is seeing for each department. Okay, the department budgets are intended to encourage the supervisors to reduce inefficiency, so it will reduce the inefficiency of the supervisors. So he is taking the improvement procedures, and he is seeing their supervisors work and responsibilities, and here he is attend its budget in a given month. This was done to reinforce the budget supervisor desire to reduce the cost. So if the budget is good and they are performing work is good, then it will be reinforced. If it is not work accordingly, then it will changing accordingly. Now Mr. Daniel often stressed the importance of continued progress towards attaining the budget. He also made it known that he kept a file on this performance report for future reference. Next, identify the problems which appear to exist in budgetary control system and explain how budgetary control system would be revised to improve the effectiveness. What are the problems we have here? First of all, there are goal conflict. One person is dealing in a saving and one person is going for a cost, and they are giving rush works. They are giving one budget and they are not providing the time to complete it, and they are rushing into another work. That is the cases. First we will see that the budgetary control system appears to have several very important shortcomings which reduce its effectiveness, and it may cause us to interfere with good performance. When you have an important shortcomings, it will reduce your effectiveness, and in fact where it is influence with good performance. Some of the shortcomings are explained below. First, what is the shortcoming? One is this is lack of coordinated goals, because Mr. Singh has been led to believe in high quality. He is a person who is believing in high quality of the goal, but it appears low cost in his goal, but company require low cost goal. He does not know what the goal are and thus cannot make decision which lead towards reaching the goals. So conflict in goals, lack of coordinated goals. Employee is working for quality and boss require cost reduction. Next, influence uncontrollable factors. The actual performance related to budget is greatly influenced by uncontrollable factors. That is, what are the uncontrollable factors? Is there rush orders? So they are giving one work and giving another rush orders, which is urgent is they are telling. Next, the variance report serve little purpose here for evaluation of performance. Next, the short run perspectives. The monthly evaluation and the budget tightening on monthly basis result in a very short term. So they are providing monthly basis of resources. It is a very short run perspective that Mr. Singh is providing to their supervisors, tightening the monthly results. This will result in inappropriate decisions. So you are seeing for budgets for day to day and 3 to day and monthly basis, it will give the stress to the person, and the improvement in the budgetary control system must correct the deficiencies described above accordingly. How can we correct the above? First one, budgetary control system must more clear. If it is for the clear define the company's objective. What is the company objective? It is provide to quality or it is required to low cost. We must see againstly, we must see accordingly. So for improvement of budgetary control, we require more clear defined by company's objective. Next, one, budgetary control system must develop an accounting reporting system which better matches controllable factors with supervisor responsibility and authority. It means which work to be done first, which work is priority. We must know the as per accountability. That is the second one. Next, establish budget value for appropriate time period. So appropriate time period will be required which do not change monthly simply as a result of changes in prior month of performance. Mr. Singh what he is doing accordingly is changing the all budgets. So changing means it will stress giving to the employees, so that establish budget values for appropriate time periods for which do not change monthly simply as a result of change in prior month performance. Next, the entire company from top management down must educated in sound budgetary procedures, so that all parties will understand the total process and recognize the budget gained. So all must be educated, then only they know the what is the budget, what is required, what is the total process, what is the benefit of gaining. Then only it is good for organization. It is the case scenario. Next, participation in budget setting process. Here they will be having two main approaches. One is imposed style approach, another one is participative approach. Imposed means senior manager giving work to the lower level management. Participative approach means everyone will participate, and the bottom person also have the opportunity to share his ideas. That is imposed approach. How senior management cooperative plans and allocate work to the department managers, and department managers allocate work to the budget hold staff. Next, where top down approach, that is participative approach. Here the budget holding staff, who is the working person, knee down and submit budget department managers, and here quality resources he will send to the senior management may accept or he may reject. If he reject, he will send back to the departmental management. If he accepted, he will send to the senior management and departmental management, and if departmental management is he will send, and for this one it will go to the budget holding staff and they will continue the work. So here they will give the idea, and this idea will be seen by this person. After this person, he will tell to this person if he may accept or reject. If he reject, he will send back. If he accept, he will send to the who is the top management is there. If he top manager is there, okay. If not there, we will department managers, and it will send to the budget holding staff. This is the case of top down and bottom up. So here the what they provided factors influencing effectiveness of participation. Participation is less effective and relevant where personality with managers who are more highly authorizations, work situation in highly performed program and technology constraints environment, locus of control for those individuals who feel they have a low degree of control over their destiny, job difficulty where job difficulty is low, type of organization structure in a centralized organization. This is the case. Next, what are the circumstances where top down budget setting is preferable? Where it is preferable means where personality character of the participation may limit the benefits of participation. Next, where participation by itself is not advocate in ensuring commitment to standards and managers can significantly influence the results. Next, where a firm has large number of homogeneous units and operating in a stable environment, then it is required top down budget setting is preferable. Next, where process is highly programmable and clearly stable and input output relationship, it is a top down approach. Is circumstances is required. Next, they provided one case scenario. For this case scenario, there is one 1997 Excellent Woodward Private Limited. Excellent Woodward Private Limited is one of the designated manufacturer and supplier of an unlimited array of wooden furniture works. Okay. Product completion comprises of module furniture, workstation and cafeteria furniture. So what is he is doing? Module furniture, workstations and cafeteria furniture, and moreover it also engaged in presenting furniture services. So he is presenting furniture services that include the interior fit out. Next, since inception it has strive to prefer an excellent blend of optimum quality and prices, and successfully established the company has the preferred choice of customers in the past years. This is the reason that its products and services are applauded in the industry for its flawness. Next, what is it doing? At EWPL, a world-class infrastructure is a setup with different type of latest technologies. So they are setuping for with different latest technology was using based on machines and equipment which provide great support in hassle-free production and storage of preferred assortment. And besides the spacious workspace, it has recruited a men of skill and experienced professionals who are magnificently trained to understand and meet the diverse client requirement within the committed time period. So they have a committed time period. It aims to attain complete client satisfaction and put it in best efforts to achieve the same by offering outstanding product range and feasible services. Okay, what is their EWPL budgeting process for sales? What is the sales here provided? Each sale girl, each sale girl make customer wise listing of sales for the last few years. Based on this information and her knowledge about customer requirement, she determined an overall sales goals. So he determined an overall goal. Next, the sales manager W robot gathers all information, all this information. Sales manager from sales girls. Here the sales girls, here each sales girl is working. From each sales girls to sales manager is getting the information, and this person what he do, he will modify it better. And particularly W looks at variance in sale growth and modifies low projection to be in a line with average, and he of course discusses these corrections with the concerned sales girls. The as usual approach is hold up the other forecast and attributes lack of sale growth to lower talents. Next, W then meets with Jonald, is the managing director. By this time, J already back out of his sales expectation for next year based on his desired profit. J discusses the overall target and allocate the among, and the result as usual result is 7 to 10% increase in projected sales, which the W allocates among the sales girls based on their past performance. Of course, J desires that the W discuss the negotiation any alteration with the sales force, and he believes that with appropriate logics and not high but attainable target for his sale team can be met. Here we require to provide discuss participative nature of sales budgeting process at EWPL and advise best approach for EWPL perspective that may be adapted. For adaptive, it is better for go for top down approach and bottom up approaches which is providing. And here we require the same, we want to require the sales girls involvement, then it is better. Sales girls must be prepare the individual budgets, then it is better. For when they involve, they will prepare on their own, it will increase our productivity, so that the company may provide the guidelines, then for that, based on that guidelines, the sales guys must prepare their individual budgets. From that individual budgets we will validate, and what is the company's objective, we will interact. This is the review. Next, we will see the answer. What the participative nature in sales budget? What is the participative nature? In participative budget, subordinate managers create their own budgets, and these budgets are reviewed by senior management. So, such budget communication, a sense of responsibility to subordinate managers, and fosters creativity. This is also called as bottom-up approaches. In sometimes referred it as participative. It is called as it is participative approach, participative budgeting. Why? The subordinate managers create their own budgets, and these budgets are reviewed by senior management. Reviewing is just a required formality. It is budget communication, a sense of responsibility, responsibility to subordinate managers and foster creativity. This is also called as bottom up approach. And as the subordinate managers create the budget, it might be possible that budget goals become managers' personal goals sometimes, resulting in great goal concurrence. In addition to behavior benefit, participative budgeting also the advantage of involving individual whose knowledge of local conditions may enhance the entire planning process. Next, the participative budget described here appears participative in name only. In virtually every instance, the participative inputs is subject to oversight and discussion by sales manager. Some amount of revision is also common. However, excessive and arbitrary review that substitute a top-down target for bottom-up estimates makes a decent process. Such a gutting appears to be the case of EWPL. J statement indicate a very autocratic style. It will be autocratic style. The revision process also seems to be arbitrary and capricious. There is a little incentive for the sale girls who spend much time and efforts in projecting the true expected sales because they know that the target would be revised again and J estimate will prevail. So what they are thinking here, the work is doing by sale girls and they are keeping their minds and they are working for target. After that they are know that whatever they write and the manager will revise this, see the situation, create an interesting discussion about the cost and benefits of participative budgeting and gives rise to game playing on slacks. Next, in top down approach, budgeted figures will be imposed on the sales personnel by senior management and sales personnel will have a very little participation in the budgeted process. So when if you go for top down approach, there we will create a budget for by the senior management and the who is the sales personnel is there know that sale girls, they will little participation in the budget processes. That budget will not interest them since it ignores their involvement altogether. While a bottom up approach, each salesperson will prepare their own budget. This budget will be combined and reviewed by the seniors with adjustments being made to coordinate the needs and goals of overall company. It is the bottom up approach where involvement of sale girls is there and for the whatever the budgets prepared by the sale girls and coordinating by the manager with the company's overall goals. Next, proponent of this approach is that salespersons have the best information of customers requirement, therefore they are in the best position in setting the sales goals of the company. More importantly, salesperson who have a role in setting these goals are more motivated to achieve these goals. However, this approach in time intensive and very costly when compared with the top down approach. In order to achieve personal goals, participants may also engage in politics that create budgetary slack and other problems in the budget system. Next, since both top down and bottom approach are legitimate approach, so EWPL can use combination of both. Seniors know the strategic direction of the company and important external factors that affect it, so they might prepare their set of planning guidelines for the sales also. So here they must use the both approaches because sales girls they don't know the about the goals of company, only the sales manager will know, and accordingly sales manager must prepare the set of planning and guidelines. For that guidelines may include the forecast of key economic variables and their potential impact on the EWPL plans for introducing and advertising a new product and some broad sales targets, etc. With these guidelines, sales girls might prepare their individual budgets. These budgets need to be reviewed to validate the uniformity with the EWPL objective. After review, if changes are made, the same should be discussed with the girls. So whatever the changes is doing, it must discuss with the girls. Then only they know what is they doing the wrong. It is main important. That is the case here. Next, use of accounting information in performance evaluation. What is there in performance evaluation? Here we will provide a summary of the affected. Here we have three styles for this. One is budgeted constraint style, and one is profit conscious style, and one is non-accounting style. For budget constraint style, the evaluation is based upon the cost centers. Whatever the cost center you have, based on that cost center ability to continue to meet the budgeted and short-term basis, they will see the cost center is the ability to continue in a short-term basis or not. And profit conscious style, here the performance of cost centers is linked ability to increase. Here they will increase. Here they will ability to continue. here he will going for increment, he will going for increment. Here they will continually meeting. Next, general effectiveness of his unit operations in relation to long term goals of the organization. Next, non-accounting style. Accounting data plays a relatively unimportant part in the supervisor's evaluation of the cost center head performance. Next, a summary of the effect of three style of management. Style of evaluation: budget constraint and profit constraint and non-accounting. Here involvement of cost will be high, low. Non-accounting will be low because they relatively unimportant part of the supervisor evaluation of cost center at performance. They will not play any. Accounting data plays relatively unimportant in supervisor's evaluations. Next, job related tension in the budget, they may be high and profit content medium. Next, manipulation of accounting information here extensive, here little and relation with superiors, here poor, budgeted in case of poor, and profit concerns will good and non-accounting will be good. Relation with colleagues, poor, good. Next, we will see that beyond budgeting, what is there? In case of traditional budget, we have some limitations. What are the limitations? Limitations of traditional budget, that is time consuming and cost to put together, and constant responsive and flexibility, often barrier to change, rarely strategically focused and often contradictory, and add little values, especially given time required to prepare, and concentrate on cost reduction, not on value creation. Here cost reduction will be concentration, value creation they will not follow. Develop and update too infrequently, they are changing infrequently, so the persons will not able to interact. Next, are based on unsupported assumptions, they will be unsupported assumptions and guesswork, so they will not guess the work is going now, they will provide unsupported assumptions. Next, reinforce departmental barriers rather than encouraging knowledge sharing, make people feel undervalued. So this is the limitations of traditional budgets. What is this traditional budgets limitations? One, time consuming and responsive and flexibility to our constraints. There is a barrier to change, and they are focusing strategically, really focusing strategically, and they are providing the updates in a infrequent way, and their assumptions will be unsupported, they do not have any base. That is the case. Why go beyond traditional budgeting? Because of that limitations, we will go for beyond budgeting. According to CMA official terminology, an idea that company need to move beyond budgeting because of inherent flaw in budgeting, especially when used to set contracts. It is argued that range of techniques such as rolling forecast and market related targets and can take place targeting budget. Now here characteristics of budgeting beyond budgeting. What are the characteristics? That is, rolling budget may incorporate KPI. Next, budgeting benchmarking can be incorporated in budgeting. What is the benchmarking? It is a one set, we must reach that target, it is one a target. Like, next, here the focus of the managers shift to improving future results. Next, allow operational managers to react to the environment, encourage a cultural innovation, more timely allocation of resources. Next, here suitability of beyond budgeting, where will be suitable means industry where there is a rapid change in business environment, then it is a suitable. Flexible target will be responsive to change. Next, industries using management methods such as TQM, total quality management, then continuous improvement will be key, so then beyond budgeting will be required. Next, industrial undertakings, that is radical changing is happening, or example of using BPR, business process re-engineering, then budget may be hard to achieve in such circumstances. Next, what are the 12 fundamental principles and 6 which relate leadership, they are provided. And leadership principles are, this is leadership principles and management process. We will see benefits of beyond budgeting. What is the benefit we have? So benefits are, it will help works to coordinate and beat competitions, and it will motivate individuals for defining clear responsibilities and changes, and it will eliminate what first one we will help, it will help. Next it will motivate. Next it will help eliminate some behavior issues, making reward team based. Next it will delegate. It will delegation of proper delegation of authority to operational managers who are close to the concerned actions and can react quickly. Next, operational managers do not restrict themselves to budget limits and focus on achieving key ratios, and establish customer oriented team. Here customer oriented teams will be established. Next it create information system which provide fast and open information throughout the organization. Next, implementation of beyond budgeting. What is their implementation of beyond budgeting? Define case for change and provide outline vision, and be prepared to convince the board and get started. Now, okay, next, traditional versus beyond budgeting model. What is there in traditional, in budgeting model, beyond budgeting model? Here we will have one vision and we will work for strategy, and for that strategy we will kept one budget, and after the budget we will track on that budget, control versus budget, and what is the incentive versus budget. But beyond budget model, there is a self government management culture, adapt management process. Here objective was efficient utilization of financial capital and other resources. Objective is high degree of enterprise adaptability and constant innovations. That is the case. Jeremy Hope they provided. It is not much important. Conclusions on budgeting. Okay, completed. Conclusions on budgeting. It has been proposed that budgeting is alive as well as through practice in evaluating the new tool and technique. It is new tool and techniques. Next, budgeting involved rather than become obsolete. Obsolete means it is become older and it depends on trust and transparency. Next, shift from top down centralized process, more participative bottom up exercise. Many firms, it highlights the level of improvement that can be achieved even with relative simple modifications and great deal of trust. Next, budgeting are changed. The change has been neither dramatic or not radical. Instead of incremental improvement with traditional budgets being supplemented by new tools and techniques. Forecasting in fact is more important here.